This is now an example of how we can analyse quite a significant amount of data for market risk analysis. Now in this particular example we're using the Oracle BI Foundation Suite interface, the dashboard interface, running on top of an S-based cube on the Exalytics in-memory machine. So we have a significant set of data here. It is basically 5,000 different examples of types of contract combinations. And what we're seeing is, for example, each of these numbers on here. So we're starting with a curve example here, which could be, for example, the price of Brent crude, and the risk factor buckets that we see, which go from M0 to M24. Could be examples of purchasing a contract to buy that for delivery in month plus 1 or month plus 2, right the way down to 2 years down the line. So there's an example of one of those, what these represent. Now what we're presenting on the chart is a combination or correlation of any given combinations of those types of contracts and understanding whether they are moving in a highly or lowly correlated way. So a very positive number, and the highest on here will be +1, means that they move very closely together. A -1 number means that they move in pretty much the opposite directions. And this will take into effect a variety of elements of the movement using a Monte Carlo analysis function. So what this is showing us is the combination of, this is just curve 1, all the buckets against that. So this is one of the 200 different curves that we have in here, the different risk factors, but only for 1 day's worth of information. So what I might want to do within this, even though that's a fairly decent amount of information, try to understand how that compares to another given time frame. So what I'm going to do is I'm going to move this down because it's an interactive drag and drop. I've just pivoted the time over from the top to the left. And now I'm going to bring in an extra set of data. So I'm going to select, rather than just the 2nd of January that we've already got selected on there, I could choose either another day within January, or actually what I want to do is look at this from a quarterly perspective and understand what the movements have been quarter on quarter over this time frame. I could select a day within April. What I'm actually going to do is just select the whole of April, and let's see how 1 day's worth of information relates to the whole of April 1 quarter later, and just see if there's any correlations there. What we see is that whilst there are some dispersions of red across the January time frame around the middle of the buckets, those tend to be fairly high in April rather than pretty low, so some differences there. Where there's a little cluster here, there is some red, so there's some negative movement difference there, which are actually matched up with the whole of April, the average across the whole of April that we see in these particular groups of numbers here. So M5 by M8 and M4 to M11 by M8 are quite sort of comparable in these examples. If I wanted to drill down to more detail, I could actually focus on expanding the April number and look at it. Each individual days within April will now be rendered on this chart, which is expanded below that. So I can see there's the 2nd of April, the 3rd of April, and you can see that pattern of red numbers is repeated across there very highly at the start of April, and that seems to be decreasing as we go down that time frame. Now that's obviously, this is one way to look at large amounts of data, which I could potentially of course export, look at that as a PDF, share it with a colleague in that way, so we can create an easily printable version of this data that shows us effectively 4 of those triangles on the page at one point in time that I can then share and send to a colleague if necessary. Or potentially, what I might want to do is, having done this analysis on the interactive tool, perhaps more useful if I could share an interactive link to one of my colleagues, and that's what this idea of creating a bookmark link or creating a prompted link will do. So I can share my view here with another colleague to sign into the interactive environment. But also what I can do, just on my own, as an analyst within here, is actually take any given view of this data and actually focus in on one of these cell combinations. So for example, M8 plus M4 or M8 plus M5, and actually use that as an entry point to drill and look at the trend of information against that particular intersection of the cube. So this is navigating me over to a trend view that's showing me how this has moved over time, and here we can see the combination of those 2 quarters of information that I was looking at. So I started on the start of January, where it was fairly negative, and we've moved all the way through to June here for this particular bucket, M plus 5. I could see potentially there were a few others around that showed a similar pattern when I was looking at it, so I could do a bit of a combination side by side of several different trends here. And there we can see that there's an interesting movement, that these are actually very, very closely aligned in the generic way they're going up or down at any one point in time, sort of following almost a similar seasonality there. But then there's a shift around when we go through that of which is the higher and which is the lower correlated set of curve combinations. So I may want to see that, or I could actually take any other given combination. So here we're looking at one particular curve risk factor. Let's go and see how we can look at this across any other given one. So say for example swap from curve 1 to curve 8 and compare that against curve 4, and looking at the two different risk factor buckets within there. So we can see in this case these are really closely aligned, these lines in this case, but there's a bit of a change around that April time frame that we were looking at previously. So this is one example of how we can render this these numbers over time. What might be quite useful though is giving us a representation of how all of those different cells of data, maybe how they change and correspond to each other over this same sort of time span here. In this case we're looking at 6 months worth of data. I could follow this trend over 9 months, 12 months, or even bring it back across a much broader time, the whole of the history that we have in that data. But let's just say, for example, for what we're looking at here, this interesting shift around between March and April, let's focus in on just those 2 quarters of data. In order to do that, I'm going to use a trellis chart, which we have the tab on our dashboard here to allow us to navigate over to that. I'm just going to keep this window open and switch over to another example on that, based on that. So here we have curve 8 by curve 4 again, shown in this case on a trellis, where here we're seeing effectively a spark line of information for every different combination of that cell. So in this case all of 2012 at a monthly level shown within this report. And again I could filter this down to a couple of quarters that we were interested in, and we can see now the colorings of those cells change, because the overall color of the cell is based on the average of the value over that time frame. And equally I could see this rather than at a monthly level, so in this case 6 cells of information across each of those, perhaps how does this information compare for these particular combinations at a daily level within there. So we can see this is really rendering massive amounts of information at the same time. And what I might want to do is see not just this as a trellis spark line, but we can actually create slightly more easy examples to focus in on any one given chart, so what we call the full trellises. So if I take something like a trellis area chart, this is going to be a representation of information that shows again each of the daily values across those 2 quarters of information. So this, in this case here, because it's an area chart, I can very quickly see where there's bulk amounts of information below the 0 or above the 0. So in this case here we can see this combination of those different views that we saw. And in fact, so any one of these cells here, this is the M8 by M4 and M8 by M5. Those 2 examples of cells are basically going to be the similar pattern that we saw on this previous line, so that peak in the middle dropping to an element at the bottom, and that's exactly what we see in front of us here. But as you can see, obviously we're not just limited to those 2 curves of data. We've got all these other different combinations around it that we can compare. So we can see straight away that there is a clustering of these very lowly correlated items here. But the patterns and the trends sometimes vary between them. So we've got these different trends side by side here, but actually very, very similar trends in this example, ranging all the way from this element here, say M4, on to M10 and M11 beyond that. And in fact, there's potentially some things jumping out here as items which are really negatively correlated, even in advance of those numbers that we can see above them. So what we may want to do is perhaps focus our analysis on one of these particular areas, just see what perhaps changes around here. So if we take something like M5 down to M10, and we can easily filter on that using these filter items up above. So let's say M5, 6, 7, 8, 9, 10. And that's now showing us that filtered set of data. I could potentially do, let's try and do some analysis to see what different combinations of contracts perhaps reduce our overall risk when it comes to looking at a complete portfolio. So if I take something like a combination of n+6 to n+9, where that was fairly positive there, whereas this item here is fairly negative. I wonder what happens if we take an average across those two particular combinations. So I'm going to create a calculated item, which is the average of M6 and M9, and I'm going to use obviously the average function to do that. So that's keeping us with our view that we saw previously. Now we see across the bottom again, we've got another line been added to this particular grid that shows us that number and how that's trended over time. So you can see by taking those two values side by side, we sort of evened out the highly negative, highly positive correlations in those numbers to something more around the 0 mark, which may give us a better opportunity to take advantage of different movements in the markets where these two things are less sort of joined to each other in the way that they move. So that's one example. We could equally maybe compare how that item up above, which was M5 to M9, let's see how an average might have compared if we were to choose those two items for combination. So let's do the average of M5 and M9, which we take the average function again, and let's see how that compares on this chart. So now we can see if we look at just those two examples side by side now, this new one that I've added is again much more variable in its nature, more varied. So this is quite a bit more disparate across the different other risk factor buckets I might have invested in. It may be a better example to think about M6 and M9 as a good way of balancing my portfolio as I move forwards. So hopefully this has been a good example of how you can do quick analysis across vast amounts of data in this way using Oracle BI on Exalytics. And another example that you could take from this is maybe again at the daily level, maybe move back to the monthly level. We can see generally how these trends compare over time, and there are other types of visualizations available for looking at information in that way. So here we have the example of perhaps a trellis chart, a trellis bubble. In this case we are looking at not just one measure, which was the value average, but I'm actually comparing the value average from left to right across this grid now, from -1 to +1, to the value average change from the previous value. So items that are outliers in the top or the bottom of these particular cells will indicate there was a really big shift from one number to the next. So if we look down that M8 path that we were looking before, we can see many of these are quite closely clustered, although actually around some of those timeframes there were some pretty big movements. For example, there, January 2012, there was a big negative movement in that case, and likewise here there was actually a fairly large movement in the other direction in February 2012. So this is again another way of actually just visualizing a large amount of data and looking at that over lots of different perspectives at the same point in time, here correlating two different measures on one screen across huge amounts of data. So the raw cells account for the amounts of value average numbers is going to be around the 10 billion mark on this particular cube. So when you take into account the fact that we've got various other different measures available on this, we're basically looking at about 60 billion different types of representations of numbers we can see on these reports side by side. So hopefully it's a pretty good example of the sorts of scalability and scope you can get by running these types of solutions using BI Foundation Suite, Oracle BI Foundation, on top of the Oracle Exalytics in-memory machine.